Good afternoon, traders. This is Kevin Craney with RJO Futures with your afternoon financial market update. Market's trading a bit lower here ahead of tomorrow's unemployment report. Looking ahead at that report, expecting 165,000 on payrolls tomorrow with the unemployment rate remaining at 7.8%. Really, when we look at the interest rate market, what we're seeing is 10-year Treasury notes actually push up to that 200 basis point level, the highest we've seen in quite some time, and in fact, highest levels really we've seen in almost 9 months. Backing off a little bit here in the close, around 198 basis points before we go into tomorrow's report. And really, when you look at the equity market's come very far, very fast. In the first month of trading, basically, we're already up over 6%, around 5 or 6% or so for the month. And really, you could say that it's a bit too far, too fast. When we look at volume behind some of the moves here lately, the volume just hasn't been there. We've had really more than enough news to actually sell things off, what with a negative GDP number for the fourth quarter. That really didn't budge the equity markets too much. Plus some negative macroeconomic data, and that didn't push the equity markets down too much. So really, we're in this environment right now where good news, our bad news is good news, and good news is great news, and really seeing pressure on these Treasury yields as they start to climb a little bit more. I think the unemployment report could certainly be the catalyst, but the bigger catalyst in the next 3 to 4 months is going to be the debt ceiling, the automatic spending cuts that could come into play toward the end of March, and how Washington, D.C. really handles the fiscal imbalances that are still in place here in the United States. We've seen a nice run here in the beginning of January. Some of the old saying is, so goes January, so goes the rest of the year. I don't necessarily think that it's going to be a straight line up. I think there's going to be a lot of back and forth volatility, particularly in this intermediate term. So this may be a good opportunity to take a look at interest rates, both at the 10-year and the 30-year level, and try and pick those up at these higher yields or lower prices as we start to move into February and we start to deal with a little bit more of these fiscal imbalances and the debt ceiling and the term that's coming up on that debt ceiling. Please give me a call at 888-596-5817. We can discuss these opportunities and others. As always, remember, futures trading is not suitable for everyone and does carry a high degree of risk.